admission of a partner. Why there is a need for a new partner? The firm may be due to shortage of funds or administrative incapability. The firm may need money or may not be able to manage the firm efficiently, and so it needs another person. They admit another person as a partner. But according to 31(1) of the Indian Partnership Act 1932, a person can be admitted only with the consent of all the existing partners. All the existing partners should give their consent for the admission of a new partner. Even if one partner doesn't give his consent, he will not, new person cannot be admitted as a partner. On the admission of a new partner, the existing partnership agreement comes to an end and a new agreement comes into effect. The other name of a new partner is incoming partner. In the admission of a new partner, two terms you must understand. First one is capital, another one is goodwill. What do you mean by the term capital? The amount that the new partner brings into partnership firm is capital, and the consideration which he pays to the old partner for the right to participate in the division of future profit is called goodwill. Since a new partner will be getting a share of profit, the share remaining for the other partners will be less than previously, and so a new partner has to compensate them by way of goodwill. So he has to give certain amount to the partners because they will sacrifice for the admission of a new partner. Previously, they may get 1,000 rupees. The share of profit may be 1,000. Then, after the admission of a new partner, if the firm profit is same 2,000, their share will be reduced. They sacrifice a sum of their profit, and so for that sacrifice, the new partner has to bring some amount or has to give some amount to the old partner. That amount is called goodwill. The partnership firm has to make certain adjustment for admitting a new person as a new partner. What are they? First one, calculation of new profit sharing and sacrificing ratio. The profit sharing ratio will be changed and we have to calculate new profit sharing ratio as well as sacrificing ratio. How much the old partners sacrifice, that also we have to calculate. Second one is treatment of goodwill. Third one is revaluation of assets and liabilities. Fourth one is transfer of reserves and other accumulated profit. Fifth one is adjustment of for capital. These are the accounting adjustment which are necessary on the admission of a new partner. First one, new profit sharing ratio and sacrificing ratio. The ratio in which all partners, including new partners, share the future profit and losses is known as new profit sharing ratio. How they are going to share the profit or loss of a business in future, that is called including the new partner. Suppose there are two partners A and B. If C is admitted in a partnership firm, then what would be the new ratio between three partners? Now 2 has been increased to 3, A, B, C. So, that is known as new profit sharing ratio. The ratio in which the old partners have agreed to sacrifice their share in profit in favor of new partner is called the sacrificing ratio. How much they are sacrificing for the sake of new partner? They are sacrificing certain portion of their profit for the sake of the admission of a new partner, that we have to calculate. That is known as sacrificing ratio. How to calculate sacrificing ratio? Sacrificing ratio is equal to old ratio minus new ratio. Next, calculation of new profit sharing ratio and sacrificing ratio. Case 1. When the new share of the incoming partner is given and the sacrifice of the old partners are not given. Just they are giving the new share of the incoming partner, but no detail is given about the sacrifice that is made by the old partners. Question number 1. A and B are partners sharing profit and losses in the ratio of 3:2. C is admitted for 1/4 share of profit. Calculate new profit sharing ratio and sacrificing ratio. What is given in the problem? Given in the problem is two partners name. Old partner's name is A and B. New partner name is C. The old profit sharing ratio is 3:2. The C is admitted for 1/4 share of profit. He is given the share of profit in future is 1/4. That's all. The sacrifice that is made by the old partners are not given. And so how we are going to calculate new profit sharing ratio? If the sacrifice that is made by the old partners is not given, we have to calculate the new profit sharing ratio in this way. Let the total profit of the firm be 1. C's share is how much? 1/4. The remaining share is 1 minus 1/4, that is equal to 3/4. This 3/4 has to be shared between the old partners in the old ratio. Okay? He is going to share the profit, the remaining profit in the same old ratio. So 3/5 into 3/4, that is equal to 9/20. B's new share is 2/5 into 3/4. The remaining, this 3/4 is nothing but a remaining portion of the profit. So 2/5 into 3/4 is 6/20. C's new share is 1/4 is given. 1/4 into 5/5, since the denominator is 20. Okay. So 5/5 is equal to 5/20. So new profit sharing ratio is equal to 9:6:5. In this way, we have to calculate the new profit sharing ratio. In the above question, the sacrifice that is made by the old partner is not given. In that case, we have to assume that old ratio is the sacrificing ratio. Students need not calculate the sacrificing ratio, so the old ratio becomes the sacrificing ratio. What is the old ratio of the old partner? 3:2. That is the sacrificing ratio. This is case number 2, question number 2. New partner purchases his share from other partners. A and B are partners sharing profit and losses in the ratio of 5:3. C is admitted as partner. He acquired 3/16 of the profits from A and 1/16 from B. Calculate new and sacrificing ratio. Solution for the above problem. Name of the partner is A, B, C. C is a new partner. What is the old ratio? Old ratio of A is 5/8. Old ratio of B is 3/8. Sacrificing ratio 3/16, 1/16. That is given in the problem. That is 3/16 he acquired, old partner acquired 3/16 of the profit from A, 1/16 from B. So that is the sacrifice that is made by the old partner. So the sacrificing ratio is 3/16 and 1/16. From the old share, we have to deduct the sacrificing ratio. That is the new share. So old ratio minus sacrificing ratio is equal to new ratio. 5/8 minus 3/16 is equal to 7/16. Here 3/8 minus 1/16 is equal to 5/16. The LCM is 16. So 2 into 5 is 10. 10 minus 3 divided by 16 is equal to 7/16. Here the LCM is 16. 6 minus 1 is 5/16. Like that we have to calculate the new ratio. So the new profit sharing ratio is 7:5:4. Sacrificing ratio that is given in the problem itself, that is 3:1. Okay, 3:1. 3:1 is the sacrificing ratio. Then question number 3. A and B are partners sharing profit and losses in the ratio of 5:3. A and B are old partners. C is a new partner. For 1/5 share in which he takes 1/10 from A and 1/10 from B. Calculate new profit sharing ratio. New ratio calculation. Old profit sharing ratio, that is 5/8 and 3/8. C got his share 1/10 from A and 1/10 from B. His total share is 2/10. How? 1/10 plus 1/10. That is nothing but 2/10. Or if we simplify, 1/5. new share. How to calculate new share ratio? A's share after giving 1/10 to C. The old share is 5 by 8. B's old share is 3 by 8 minus 1 by 10. So, if a LCM is 40, then 5 into 5, 25 minus 4, 21 by 40. Here the LCM is 40. 45 into 3, 50 and 4 into 1, 4. So, 11 by 40. C's share is 1 by 5 into 8 by 8. That is equal to, that is 1 by 5 is given. The 40 we are getting here, and so it should be multiplied with 8 by 8. So C's share is 8 by 40. So the new ratio is equal to 21 is to 11 is to 8. Then calculation of sacrificing ratio for the above problem. Sacrificing ratio is equal to old ratio minus new ratio. A's old ratio is 5 by 8, B's old ratio is 3 by 8. Oh, that's A's new ratio is 21 by 40, B's new ratio is 11 by 40. 5 by 8 minus 21 by 40, LCM is 40, 25 minus 21, 4 by 10. Here 40 is the LCM, 15 minus 11, 4 by 10. So the sacrificing ratio is 1 is to 1. The sacrificing ratio is 1 is to 1. How? 4 by 10 is to 4 by 10. That is nothing but 4 is to 1 or 1 is to 1. In this way, we have to calculate sacrificing ratio. The next case is old partner surrenders a particular fraction of their shares in favor of new partner. A and B are old partners and they are sharing, their old profit sharing ratio is 7 is to 3. C was admitted. A surrendered 1/7 of his share, B surrenders 1/3 of his share in favor of C. Calculated new profit sharing ratio. In the above case, first surrender shares have to be calculated, then it must be deducted from the share of the old partner to find the new share. So, to find out the new share, first we have to calculate the surrender, how much portion he is surrendered to the old partner. A's old share is 7 by 10. Then A surrenders 1/7 of 7 by 10. That is 7 by 10 into 1 by 7. That is nothing but 7 by 70. If we simplify, it will become 1 by 10. B surrenders 1/3 of 3 by 10 in favor of C. 1 by 3 into 3 by 10 is equal to 3 by 30. Then or if we simplify, we will get 1 by 10. Therefore, A's new share, old share is 7 by 10. He sacrificed 1 by 10. So, the new share is 6 by 10. B's new share is 3 by 10. He surrenders 1 by 10. And so, his new share is 2 by 10. C's share, he gets 1 by 10 from A and 1 by 10 from B. And so, 2 by 10. New share of A is to B is to C is 6 is to 2 is to 2. If we simplify, we will get 3 is to 1 is to 1. Case 3. When old ratio of the old partner and the new ratio for all the partners are given. Question number 5. Question and solution. A and B both are old partners. They are sharing profit in the ratio of 3 is to 2. C is admitted into partnership. The new profit sharing ratio is 5 is to 3 is to 2. Oh, you are asked to calculate the sacrificing ratio. The formula for sacrificing ratio is equal to old ratio minus new ratio. That is given in the problem. Old ratio is 3 divided by 5. New ratio is 5 divided by 10. So LCM is 10. Then 2 into 3 is 6. Minus 5 is equal to 1 by 10. Then B's old share is 2 by 5, new share is 3 by 10. So, LCM if we take 10, then 2 into 2, 10 divided by 5 is 2, 2 into 2, 4, minus 3, 1 by 10. So, hence the sacrificing ratio is equal to 1 is to 1. In this way, you have to calculate the new profit sharing ratio as well as the sacrificing ratio. This is the base for calculating the calculation, partnership admission calculation, and this is the fundamentals for or foundation for the preparation of balance sheet. If you do not know how to prepare, how to calculate the new ratio or the sacrificing ratio, the entire problem will be collapsed. And so you have to be very careful while calculating the sacrificing ratio as well as new ratio. Thank you. The next topic is goodwill. It is very difficult to define goodwill in accountancy. It may be described as the value of favorable attributes relating to a business enterprises. Favorable attitude may be customer's attitude, desirable location, pleasing surroundings, superior profit, absence of competition. So these are all the favorable attitude. See, when a partnership firm decides to purchase the business, then it has to pay money not only to the value of the business which is run by the other person, but it has to pay the value of goodwill also. Without much strain in future, they can earn enormous profit. For that, they have to pay goodwill. Goodwill is an intangible asset, but not a fictitious one. It has its own value like land and building. But we cannot sell goodwill separately. But at the time of admission, we can, at the time of selling of a partnership firm or at the time of selling of a business, goodwill is valued and it can be sold. But sometimes the value of goodwill is more than that of the value of tangible assets, because without much strain, the company or the partnership firm which purchases the successful business they can earn enormous profit. The successful business in terms of profit, okay? So it may be customer attitude. Customers may prefer the particular business or particular shop. They give their patronage. They are feeling satisfied, and so they visit the shop again and again. Desirable location, pleasing surrounding, superior product, and absence of competition. Why do we need to calculate the value of goodwill? As far as partnership firm is concerned, it is necessary to value the goodwill whenever the mutual rights of the partners change. So if they change the profit sharing ratio, when a new partner is admitted, when an existing partner is retired, when they sell the partnership firm, or when amalgamate the partnership firm, they have to value the goodwill. So what are the circumstances that the partnership firm has to value the goodwill? Let's see one by one. So when they change the profit sharing ratio, new partner is admitted, existing partner is retired, two or more firms are amalgamated, partnership firm is sold and dissolved. In all the cases, the partnership firm has to value the goodwill. There are several factors which affects or influence the value of goodwill. The major factors are quality of the product which are sold in the shop, then location or site, then competition. If the business doesn't have much competition, then the value of goodwill will be high. Capacity of management, capital required, nature of business, type of customers, time. These are all the major factors which influences the value of goodwill. Then methods of valuation of goodwill. First method, there are three methods. First method is average profit method. Second method is super profit method. Third method is capitalization method. Let's see the method one by one. First method is average profit method. Under this method, past profits of a number of years are taken into account. Such profits are added and the average profit is found out. The average profit is multiplied by certain number of years to arrive at the value of goodwill. There are two types of average profit. They are simple average profit and weighted average profit. So here we have to calculate the average profit, and then it has to be multiplied with the number of years that is given in the problem itself. How to calculate average profit? Total profit divided by number of years of profit. Average profit should be multiplied with the number of years of purchase that is given in the problem itself. Under the average profit, there are two methods, simple average profit and weighted average profit. How to calculate value of goodwill under the simple average profit? See, we are giving, we don't give any weightages to the latest or past year's profit. Simply we calculate goodwill by way of multiplying average profit into number of years of purchase. That is simple average profit. Then the second method is under the average profit method is weighted average profit. It is computed by assigning weights to the profits of the previous year. More weightage is given to the recent years and less weightage is for old profit. Profit of the previous year multiplied with the weights assigned. We are giving weightages to the profit. That weightages are given in the problem itself. The profit and weightages is given. First, you have to calculate the weighted average profit by way of sum of weighted profit divided by sum of weight. Then goodwill, sum of weighted average profit. Here we calculated that weighted average profit should be divided by number of years of purchase. In this way, we have to calculate the goodwill under the weighted average profit. The difference between simple average method and weighted average method is in simple average method, we don't assign any weightage, but in the weighted average profit, we are assigning weights to the profits. Then let's see the problem. Average profit is equal to total profit divided by number of years. Goodwill is equal to average profit into number of years of purchase. This is simple average profit method. Calculate the amount of goodwill at 3 years purchase of last 5 years average profit. You have to calculate 5 years average profit because the years 5 years profit is given. We have to add all the previous profit and that should be divided by 5. We can get average profit for 5 years and that should be multiplied with the number of years of purchase. Number of years of purchase is 3. So first year profit is 9,000 given. Second year profit is 14,000. Third year 20,600. Fourth year 8,400. Fifth year 8,000. So this is the solution for the above problem. Total profit for 5 years is 60,000 rupees. That 60,000 should be divided by 5. Why? Because the number of year is 5. Okay. 5-year profit is given and so it should be divided by 5 in order to get average profit. If we divide 60,000 by 5, we will get 12,000 rupees. That is the average profit. That average profit we have to multiply that average profit with number of years of purchase. Number of years of purchase that is given in the problem itself, that is 3. So 12,000 into 3, that is 6,000 rupees. In this way, we have to calculate value of goodwill under simple average profit method. Then the next method is under the average profit is weighted average profit. This is the problem. You are required to value the goodwill on the basis of 3 years purchase of the weighted average profit, assigning weights of 1, 2, 3, 4 respectively for the 4 years. 4 years profit is given and you are asked to assign weight 1, 2, 3, 4. Okay. So weight for each and every year profit. First year profit weight is 1, that is given. Second year profit is 2. Third year profit is weightage is 3. Fourth year profit weightage is 4. This is the information. These are the information which is given in the problem. With the help of this information, you have to calculate the value of goodwill under the weighted average profit. This is the solution for the above problem. First year annual profit is 30,000. Weight is 1. We have to multiply annual profit into weight, that is annual profit into weight is 30,000. Second year profit is 40,000. You have to multiply this 40,000 with 2, that is weight. 40,000 into 2 is 80,000. Third year profit is 50,000. 50,000 into 3 is 1,50,000. Fourth year profit is 70,000. 70,000 into 4 is 2,80,000. The total weightage is 10,000. Total product, that is sum of weighted profit is 5,40,000. The formula is sum of weighted profit divided by sum of weight. Sum of weighted profit is 5,40,000. Sum of weight is 10. So if we divide 5,40,000 by 10, we will get 54,000. This is weighted average profit. So goodwill, weighted average profit into number of years purchase. Year of purchase. The weighted average profit is 54,000. Number of years of purchase is 3. So 1,62,000 is the value of goodwill under the weighted average profit method. Then the third method is super profit method. What do you mean by the term super profit? It represents the profit earned by the firm over and above the normal profit earned by the other firms in the same business. So if they earn huge profit than that of the same business which are done by the others, then the profit, extra profit which is earned by this firm is called super profit. Super profit, how we have to calculate the super profit? It is calculated by deducting the normal profit from the actual profit. Normal profit is calculated by way of capital employed into normal rate of return. Say for example, if a partner in a partnership firm, they invest 1 lakh rupees, the normal rate of return is 10%. Then the normal profit is 10,000. If they earn 20,000 rupees during that year, 10,000, that is a super profit is the actual profit or average profit minus a normal profit. 20,000 minus 10,000 is 10,000. 10,000 is the super profit. That super profit should be multiplied with the number of years of purchase to calculate the goodwill. Problems under the super profit method. A firm earned net profits during the last 3 years. First year 18,000, second year 20,000, third year 22,000. The capital investment of the firm is 60,000. Then a fair return to the risk involved is 10%. Calculate the value of goodwill on the basis of 3 years purchase of the super profit. This is nothing but normal rate of return. The normal rate of return is 10%. Capital employed by the business is 60,000. Profit of the 3-year profit is given. We have to find out the average profit. Then we have to compare with the normal profit. Then we have to calculate super profit. That super profit should be multiplied with the number of years of purchase. Number of years of purchase is 3 years. Let's see how to calculate the value of goodwill under the super profit. First we have to calculate the average expected profit. 18,000, 20,000 plus 20,000 plus 22,000 divided by 3. So 60,000 divided by 3, 20,000 rupees is the average expected profit. Normal profit, capital employed into normal rate of return. Capital employed is 60,000, normal rate of return is 10%. So 6,000 is the normal profit. Super profit is equal to average expected profit minus normal profit. Average expected profit is 20,000, normal profit is 6,000. So 20,000 minus 6,000, 14,000 rupees is the super profit. Goodwill is equal to super profit into number of years of purchase. 14,000 into 3, number of years of purchase is given 3. So 14,000 into 3, 42,000 rupees. Under the super profit method, the value of goodwill is 42,000 rupees. Then the next method is capitalization method. This method is useful when the actual profit is less than the normal profit. Under this method, first the total value of the business is ascertained on the basis of actual profit. Formula is adjusted profit divided by normal rate of return into 100. Value of goodwill, this is nothing but capitalized value of profit. Value of goodwill is equal to capitalized value of profit minus net tangible asset. What is net tangible assets? Total assets except goodwill minus liabilities to the outsiders. These are all the formulas to calculate the value of goodwill under the capitalization method. Then this is the question. A firm earns rupees 60,000 as its annual profit. The rate of normal profit being 10%. Assets of the firm is 7,20,000. Liability is 2,40,000. Find out the value of goodwill by capitalization method. Given annual profit 60,000. What are the information that are given in the problem? Annual profit is 60,000. Normal profit percentage is 10%. Then assets is 7,20,000. Liabilities is 2,40,000. First, let us calculate the total capitalized value of the firm. Actual profit into 100 divided by rate of normal profit. Actual profit is 60,000 into 100 divided by 10, that is equal to 6 lakh rupees. This is capitalized value of the firm. Net assets of the firm is total assets minus liabilities. In this case, there is no intangible goodwill assets like goodwill and all. So directly we can write 7,20,000 and liabilities, that is also given 2,40,000. So 7,20,000, if we deduct 2,40,000 from 7,20,000, we can get 4,80,000, that is net assets of the firm. So goodwill is equal to total capitalized value of business minus net assets. Total capitalized value of business is 6 lakhs. Net assets is 4,80,000. So the value of goodwill is 1,20,000 rupees. So there are 3 methods. One is average profit method. Under the average profit, we have two styles. One is simple average profit, another one is weighted average profit. In simple average profit, we don't assign any weightage. Under the weighted average method, we assign weight. Then the second one is super profit method, and the third one is the capitalization method. Okay, so these are all the three methods to calculate value of goodwill. Thank you.